The Rebel Capitalist Show.
How does the ruble crash? So we've gone from, let's say, 70 to, I don't know what it is, say 140, 150. So it's gone down by, let's say, 50% against the dollar. How does that impact the free cash flow for the Russian producers? Because their revenues are in dollars, their expenses are in rubles. If the ruble goes down by 50%, then technically their expenses go down, but they still have the same type of cash flow. That means profits explode. Is that correct? Or am I? And I was looking at a chart. Maybe you can confirm this the other day of producers, just kind of in general in the country. And this was back in 2015, so I think the ruble would have been maybe 50 around around that time. And back then, the average Russian producer, it was about $17 a barrel to produce. So, and that's in dollars. So if the ruble goes down by 50%, what is it now? Is it $8 a barrel? How do you see that?
A lot of these Russian companies, like you said, they can sell in dollars. They can sell in the black market. So they won't talk about this publicly because it looks bad. And the Russian companies aren't going to issue press releases saying, we're selling all of our oil in dollars on the black market. That would attract the US military, especially if they said who they were selling it to. But it's pretty common knowledge among oil traders that if there is a problem with the government, say there is sanctions with Venezuela, there is sanctions with Iran over the years, that they can find buyers in dollars for their oil on the black market. I've even heard stories of large oil companies in the past buying oil on the black market. I think recently with Russian oil companies, I think Royal Dutch Shell announced that they did buy some Russian oil from a Russian oil company in dollars. Yep. They got it at a discount. There was a negotiation done. It's temporary. These Russian oil businesses are fine in the long term. The Chinese government came in because the shares crashed, and one of the Chinese government entities just bought large stakes in the Russian oil farms because they are bargain. Yeah, they are bargain buyers. But if you're an American citizen, the government is just changing the rules. The retail investor got screwed. I've heard from friends that their E-Trade accounts and others, they can't even buy or sell the shares now. So I don't know if that's changed the rules. The rules,
unfortunately, frozen. They're frozen. I know because I own Lukoil as an example. And
the rules, the rules are
frozen.
I was warning my patrons about this in an article in the last week or two, that the rules are going to constantly change. So what's the rules today will probably not be the rules tomorrow.
Yeah. And to be clear, that's I don't own I own the ADR, I think it is, or the pink sheet that just owns the underlying asset. So it's still denominated in dollars, just to be super clear on that.
But I think let me add something here. I think the Russian stock market being attacked, the Russian currency, all these corporations coordinating things so quickly here in the West, this is a very sophisticated version of financial warfare. So I think like plunge protection teams decided to attack the Russian currency. This is more modern warfare than in the past. So we now have like financial warfare, like very aggressive financial warfare, because you can have a team of traders or they can even just program in high frequency trading algorithms to attack a country's currency or stock market by short selling. So I think that was involved. I think the Russian currency went down very, very rapidly. It seemed as if there was a government entity involved. I think a lot of these markets, there's a lot of government intervention in the daily trading activity that a lot of people would be surprised about.
Yeah, to me, as far as the corporations pulling out, that seems more like virtue signaling and kind of this cancel culture that, back in the day, right, when we were talking about COVID, you would have a company come out and specifically say that they're denouncing or they're doing the vaccine mandate or something like that, or they're taking a stance against racism or blah 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 blah, and they would do this just to gain favor in the eyes of the general public, the mob, let's say, on Twitter or social media. And it just seems like the exact same thing now with Russia. They've just moved from racism or Black Lives Matter. Now they've just moved over to Russia. I don't know if maybe I'm misreading it.
Or they're test running as they transition to central bank digital currencies and then a Chinese government style social credit score system here in the West, how quickly they can ruin someone financially.
Biden, the administration came out with their executive order or something like that to look into cryptocurrency, and Bitcoin spiked huge on the news. But I read through the bullet points, and to me, my takeaway was this has nothing to do with cryptocurrency, and it has everything to do with implementing a central bank digital currency.
Well, I'll just tell you, here in the DC metro area, and I've been going to the DC Blockchain Summit, which was in person at Georgetown University until the pandemic. So I was going every year to that conference. There was government employees there from the Federal Reserve Bank, the US Treasury, the CFTC, the Securities and Exchange Commission. There was a lot of higher ups in the US federal government, and they own Bitcoin. Okay, so they don't necessarily want to talk about it publicly, although if you go to the YouTube channel for the DC Blockchain Summit, you can watch speeches from a lot of these guys talking about how much they love Bitcoin, but they just want it taxed and regulated more. So they are buying Bitcoin on the dip. They are speculating on it. There's so much hypocrisy here in the DC metro area, because a lot of the people that are elected here and come here talk about socialism. They want to tax profitable companies. If the oil companies start making a profit, they want to screw them over. They want to put a windfall profits tax on oil companies, but that won't help with supply. And yet these people, all they do, like privately when the TV cameras are off, a lot of them are driving gas guzzling SUVs that are not hybrids. Okay, I see around here, I live in a pretty decent area in the DC metro area, and there's literally children, these are spoiled brat trust fund babies, driving around like $100,000 SUVs that are not hybrids. And their parents are like Democrat lobbyists, and they're hardcore Democrats. And then all they talk about is trading cryptocurrency on their phone, stock option stocks, the information trading. And we saw the Fed make an announcement on this recently that they're going to stop with insider trading on stocks. And Congress is talking about policing itself on insider trading on stocks. But the truth is, that's how everyone here gets rich. They trade inside information. Information is literally peddled. So if you're on a committee or a subcommittee and your friends and family members, there's tons of information here that's leaked or literally sold or traded to profit off the stock market, to profit off rezoning of real estate. All of it, any scheme here in DC that's profitable, that's a racket, people are looking into it to make money off of it, which is why they're pushing the Green New Deal and infrastructure spending so hard, because the more spending that occurs here in DC, George, the more the parasites here in the DC metro area can steal.
Exactly. Cantillon effect.
Yep. The Cantillon effect. The Cantillon effect's also asset price inflation. So asset price, the Fed doesn't want to talk about this anymore, but we had the op-ed in November 2010 from Ben Bernanke about how good the wealth effect was. And he said the money supply would not increase. And he said it wouldn't create consumer price inflation. He was like, it's only going to be the good type of inflation with stocks, bonds, real estate. Yeah. It's going to make everyone wealthier. So they're going to go out and spend more and the economy is going to grow. And that was the Fed's narrative through the Alan Greenspan Fed, through the Ben Bernanke Fed, through the Janet Yellen Fed. And then we get to Jerome Powell, and then he starts reducing the balance sheet a little bit and increasing interest rates. And then boom, we get the 2019 repo madness crisis. And I don't know if you've seen some of the disclosures that have come out from the New York Fed since December of 2021, but there's a blog website called Wall Street on Parade, and they're going through these disclosures. And the stuff that's coming out is absolutely insane about the 2019 repo madness bailouts.
Yeah. Then the repo fails are spiking again. So we may see more volatility in the repo market in the days to come for sure.